Welcome, everyone, to another exciting episode on our Finance Club channel. Today we have an exclusive treat for you. We've put together a comprehensive PowerPoint presentation on a topic that has proven to be an excellent way to build wealth and create passive income streams. A comprehensive guide on how to invest in real estate. In this presentation, we'll be diving deep into the world of real estate investments, exploring the different avenues, strategies, and key principles you need to be aware of to make the most out of your hard-earned money. Whether you're a seasoned investor or just starting your journey towards financial freedom, our step-by-step guide will provide you with valuable insights and practical tips to help you succeed in this lucrative market. So, grab a pen and paper or your digital device, and let's jump right into our comprehensive guide on investing in real estate. Real estate investing is undoubtedly a proven method to build wealth and generate passive income. However, we understand that diving into the world of property investment can be intimidating for beginners. But fear not. We have distilled the process into key steps to help you kickstart your real estate investment journey with confidence. Over the course of this presentation, we will cover crucial aspects of real estate investing that you need to know. From understanding your investment goals and budget, to selecting the right property type and location, to securing financing and managing your investment, we've got you covered. Our comprehensive guide will provide you with the knowledge and tools you need to make informed decisions and ultimately achieve success in this exciting and rewarding field. So, without further ado, let's dive into the first step of our guide, which is all about setting clear and realistic investment goals. As we dive into the first step of our comprehensive guide, we can't stress enough the importance of defining your goals. Knowing what you want to achieve with your real estate investments sets the foundation for a focused and effective strategy. Ask yourself, are you looking for a long-term investment that will provide you with a steady income stream? Or perhaps you're interested in flipping properties for quick profits? Each approach requires different skills, resources, and risk tolerance levels, so it's crucial to be honest with yourself about your objectives and preferences. Once you have a clear goal in mind, you can begin to explore the various types of real estate investments that align with your objectives. From rental properties and commercial real estate to REITs and fix and flips, there's a wealth of opportunities out there, and we'll delve deeper into these options in the upcoming slides. So, stay tuned and let's continue our journey towards real estate investing success. Moving on to the next crucial step in our comprehensive guide: educating yourself. As with any investment, knowledge is power in the world of real estate. The more informed you are, the better equipped you'll be to make sound decisions and navigate potential challenges. Before diving into your first investment, dedicate some time to learning about the different types of real estate investments, the markets that interest you, and the risks and rewards associated with property investing. There's a wealth of information available at your fingertips, from books and online resources to courses and seminars. By investing in your own education, you'll be setting yourself up for success in this dynamic field. As you continue learning and growing your knowledge base, you'll gain a better understanding of the market, which will be invaluable in helping you identify promising opportunities and make well-informed decisions. So, always remember, never stop learning and stay curious. Now that you've defined your goals and educated yourself about real estate investing, it's time to tackle another essential step: determining your budget. As with any investment, it's crucial to know how much capital you're working with before diving in. Real estate investing often involves significant upfront costs, as well as ongoing expenses. To ensure you're making sound financial decisions, take the time to calculate how much money you can afford to invest. This includes considering the down payment, closing costs, and ongoing expenses such as mortgage payments, taxes, and maintenance. A clear understanding of your budget will help you identify suitable investment opportunities and prevent you from overextending yourself financially. Remember, Real estate investing is a long-term game, and it's crucial to stay within your means to avoid unnecessary risks and setbacks. So, keep your budget in mind as you explore potential investments, and let it guide your decision-making process. Armed with a clear understanding of your goals, education, and budget, you are now ready to dive into the exciting world of real estate investing and begin identifying potential investment opportunities. There's a wide array of options available, each with its own unique advantages and challenges. Some common real estate investments include rental properties, fix and flips, commercial properties, and real estate investment trusts, or REITs. As you explore these various options, consider how each aligns with your goals, risk tolerance, and budget. Keep in mind that diversifying your investment portfolio by incorporating multiple types of real estate investments can help minimize risk and maximize returns. In the upcoming slides, we'll dive deeper into each of these investment types and provide you with key insights and tips to help you make the most of your real estate investing journey. So, stay tuned, and let's continue to uncover the secrets to successful property investing. Congratulations! You've made it to the crucial step of making an offer on a property. By this point, you should have conducted thorough due diligence, secured financing, and identified a potential investment that aligns with your goals, budget, and risk tolerance. When making an offer, it's essential to rely on your research and stick to your budget. You may need to negotiate with the seller or enlist the help of a real estate agent to finalize the deal. Keep in mind that negotiating is a normal part of the process, and being prepared with knowledge about the property and market conditions will put you in a strong position to secure a favorable outcome. Remember, real estate investing is all about making informed decisions, and the more diligent and strategic you are in your approach, the more likely you are to find success. So, stay focused and let your research and budget guide you as you embark on this exciting new chapter in your real estate investment journey. You've done it. You've successfully invested in a property. But the journey doesn't end here. Now comes the crucial phase of managing your investment to ensure it performs well and meets your expectations. Effective management of your investment involves several key aspects. This includes carefully screening tenants, maintaining the property, and staying up to date on market trends. It's also vital to keep a close eye on your expenses and income to ensure that your investment is generating the returns you anticipated. By doing so, you can make informed decisions about your property, such as adjusting rent, making improvements, or even selling if the market conditions are right. Real estate investing is an ongoing process that requires attention, dedication, and adaptability. With careful management, you can optimize your investment's performance and pave the way for a successful and profitable real estate portfolio. So, stay proactive and diligent, and watch your wealth grow. As we near the end of our comprehensive guide to real estate investing, we cannot emphasize enough the importance of evaluating your investment periodically. After all, real estate investments are long-term commitments that require ongoing attention and monitoring. Evaluating your investment involves assessing whether it's meeting your goals, generating the returns you anticipated, and remaining sustainable over time. You may need to make adjustments or changes to your strategy to optimize your investment's performance and ensure its long-term profitability. By doing so, you can make informed decisions about your investment, such as whether to hold onto the property, sell it, or make improvements to enhance its value. Remember, real estate investing is not a set-it-and-forget-it endeavor. It requires ongoing attention and dedication to ensure that your investment remains profitable and aligned with your goals. And there you have it, our comprehensive guide to investing in real estate. We've covered the key steps to help you get started, from defining your goals and educating yourself to determining your budget, identifying potential investments, making an offer, managing your investment, and evaluating your progress. As we've seen, real estate investing can be a powerful tool for building wealth and creating passive income streams. But success in this field requires careful research, due diligence, and ongoing management. By following the steps we've outlined and staying focused on your goals and budget, you can unlock the full potential of real estate investing and achieve financial freedom. We hope this guide has been informative and helpful in your real estate investing journey. Remember to stay curious, stay informed, and always be open to learning new strategies and approaches. With the right mindset and approach, the world of real estate investing can be your ticket to financial success. If you're looking to deepen your knowledge of real estate investing, there are plenty of great books out there to help you on your journey. These 3 books are some of the most popular and highly recommended ones in the field. The Millionaire Real Estate Investor provides a step-by-step guide to building a successful real estate investment portfolio, while Rich Dad Poor Dad focuses on the importance of financial education and how real estate investing can be a powerful tool for building wealth. And if you're specifically interested in rental properties, the book on rental property investing provides a comprehensive guide with tips on everything from finding properties to managing tenants. So whether you're a beginner or a seasoned investor, these books are a great way to expand your knowledge and hone your skills in the exciting and rewarding world of real estate investing. Happy reading! Here are 4 more highly recommended books on real estate investing. These books cover a wide range of topics and strategies, from the fundamentals of real estate investing to cash flow analysis and advanced techniques for finding deals and negotiating contracts. The ABCs of Real Estate Investing provides a comprehensive introduction to the field, covering everything from finding and evaluating properties to financing and building a team. The Complete Guide to Buying and Selling Apartment Buildings focuses specifically on investing in multifamily properties, with practical strategies for finding and managing apartment buildings. What every real estate investor needs to know about cash flow is a must-read for anyone looking to deepen their understanding of cash flow analysis and its impact on real estate investing decisions. And the Real Book of Real Estate is a valuable resource featuring insights and advice from some of the top real estate investors in the world. One of the most common questions that people ask about real estate investing is how much profit they can expect to make. And the truth is, there's no one-size-fits-all answer to this question, as the profit from real estate investments can vary greatly depending on many different factors. For rental properties, the profit is typically derived from rental income and appreciation of the property value over time. The rental income minus the expenses such as mortgage payments, property taxes, insurance, and maintenance will determine the cash flow or profit. In general, rental properties that are well located, well maintained, and have good tenants can generate steady, long-term cash flow. For fix and flip investments, the profit is derived from buying a property at a discount, making improvements to increase its value, and selling it for a higher price. The profit is calculated by subtracting the total cost of purchase, repairs, and holding costs from the sale price. As we've mentioned earlier in this presentation, the profit from real estate investments can vary widely depending on a range of factors, including the type of investment, the location, and the condition of the property. And this is especially true for commercial properties such as office buildings or retail spaces, where the potential profit is typically derived from rental income and capital appreciation. While commercial real estate investments can generate higher cash flows than residential properties, they also come with a higher level of risk. That's why it's important to conduct thorough research and analysis before investing in any property or real estate investment vehicle to ensure that you're making a sound investment decision. Another popular option for investing is through real estate investment trusts or REITs. These investment vehicles provide investors with exposure to the real estate market and can generate returns in the form of dividends and share price appreciation. So, how do you calculate the profit? Well, that depends on the type of investment and your goals as an investor. However, there are a few common methods that can be used to calculate the profit. For rental properties, some of the key metrics used to calculate the profit include gross rental income, which is the total income received from all rental units, and operating expenses, which includes expenses such as property taxes, insurance, maintenance, utilities, property management fees, and mortgage payments. Net operating income (NOI) is another metric, which is calculated by subtracting the total operating expenses from the gross rental income. And cash flow, which is the amount of money left over after all operating expenses have been paid, can also be used to determine the profit from a rental property. Finally, return on investment (ROI) is another metric used to calculate the profit from a rental property, which is calculated by dividing the cash flow by the initial investment. As we've seen, calculating the profit from real estate investments can vary depending on the type of investment. For fix and flip investments, the purchase price, renovation costs, holding costs, sale price, and profit are all important metrics to consider when calculating the overall profit of the investment. For commercial properties, the net operating income, capitalization rate, and property value are some of the key metrics used to calculate the profit. It's important to note that these calculations are simplified and many factors can impact the profitability of a real estate investment. That's why it's always best to conduct thorough due diligence and work with a professional before making any investment decisions. By understanding these key metrics and using them to analyze your potential real estate investments, you can make more informed investment decisions and maximize your chances of success. As we've seen, different types of real estate investments require different formulas for calculating profit. For rental properties, we use the gross rental income minus operating expenses to calculate the net operating income. From there, we can subtract the debt service or mortgage payments to calculate the cash flow. Finally, we divide the cash flow by the initial investment to determine the return on investment. For fix and flip investments, the formula is more straightforward. We calculate the profit by subtracting the total cost of purchase, renovation, and holding from the sale price. Finally, for commercial properties, we use the annual gross rental income minus annual operating expenses to calculate the net operating income. We can then divide the NOI by the capitalization rate to determine the property value. It's important to note that these formulas are simplified and do not take into account additional factors such as taxes, vacancy rates, and future market conditions. Now that we've covered the formulas for calculating profits from different types of real estate investments, we hope you have a better understanding of how real estate investing works. Remember, investing in real estate can be a great way to build wealth and create passive income streams, but it requires careful research and analysis. We encourage you to take advantage of the resources available, including books, courses, and online communities, to continue learning and developing your real estate investing skills. And if you found this presentation helpful, please consider subscribing to our channel and liking this video for more content like this. Thank you for watching, and happy investing!